got our strategic reserve, and Bitcoin instantly sold off on the news, which was just the dumbest thing ever. Right? Because people were upset that the U.S. government didn't just come right out and say, "Hey, we're going to go and start buying hundreds, of thousands of Bitcoin every year immediately," and create a huge amount of budget problems for doing that. So, how will the U.S. acquire more Bitcoin? So, the executive order was well written and included an important sentence granting the Treasury and Commerce departments the opportunity to acquire more Bitcoin in a budget neutral way. This is responsible. Granted, what we all want here is for people to pump our bags, right? But you also have to think about the greater good. You don't want the US to go massively into debt to buy Bitcoin because we're already in a debt crisis right now. We just can't do it. So I thought that was actually quite restrained to say, look, you can add more Bitcoin to the balance sheet, but you can't impose that hurt on taxpayers, and you cannot have us go into debt to do so. And I thought that was pretty smart. So Bo Hines, the executive director of digital assets for the U.S. now, said the U.S. government wanted, quote, as much as we can get in reference to how much Bitcoin they would acquire over time. This is a very important thing here, folks. This is not, yeah, we'll just keep the Bitcoin we have and that's it. And that's how the market kind of took it was, oh, the US is just going to keep it and never acquire more. And therefore, we're just going to sell this thing because the US isn't going to pump my bags. They're telling you outright, no, we want as much Bitcoin as we can get. We just can't saddle the taxpayer or the debt with this. So here are a handful of ways that Van Eck, giant fund, big Bitcoin fund, ETF, and bank, how they're looking at how you could do this, right? So here are all the ways that you could go about having the US buy Bitcoin in a budget neutral way. Number one, revaluing gold to unlock funds. I believe the US holds like 5 or 10% of the entire world's gold supply. And right now it's being valued at $45 an ounce, which was last done in, I think, 1971, 72, the last time we valued the gold for tax purposes. And if we look at gold today, gold has popped over 3,000. So we are now over the 3,000 mark again. So it doesn't take a rocket scientist to realize that the U.S. has valued all of our gold stores at $45, but every ounce of gold is actually worth $3,000. There's a lot there you could revalue and take that extra cash after revaluing it, put that to work in Bitcoin. So Van Eck suggests that Congress could update this valuation, instantly increasing the paper value of these reserves. The extra capital generated could then be used to buy Bitcoin without printing new money or raising taxes. Two, what we could do is issue Bitcoin-backed bonds. This is something that El Salvador has done. Investors would buy these bonds with a portion of the money raised going towards purchasing Bitcoin. When the bonds mature, the government could repay investors either in Bitcoin or US dollars, offering a flexible investment opportunity. That would actually probably be the most successful one. That would be a huge deal because right now people are uncertain about the US's ability to pay their debt, which is why our treasury bills are at, well, let's take a look. The 10-year rate is, where are we? 4.2%. There we go. So it's run up quite a bit since the 2020 low. This means that when we refinance about $7 trillion worth of debt later this year, we have to do it at a 4.22% level, which is the highest it's been since like 2010. That's not good. Really what we should have done is when Biden was in office, not issue short-term debt paper over 2 years and then kind of get us locked in where we have to do this. What Trump is trying to do, we'll see if he can do it, is drop this rate before all that refinancing is due. So, if you think about it, the reason that we're at 4.22% is because the U.S. is viewing, or excuse me, the world is viewing the U.S. as not able to pay their bills, right? They're least trustworthy. And I mean, it's been a slow decline. Look at this, since 1984, when T-bills were paying 12% during hyperinflation stuff, not hyper, but it's been down and to the right this whole time. But you can see since COVID, we took on so much goddamn debt as the United States that suddenly, boom, we raised rates and the rest of the world said, we don't know if you can actually pay us back on these. So in order to take the risk of holding US debt, you need to pay us more money for the added risk. And so we've been up and to the right for the first time, since the 70s, really. I mean, it's remarkable, the sea change there. Issuing a bond or treasury that's backed in Bitcoin rather than just US paper, which is value, is terrible, would be a super smart thing. I think that would actually sell quite a bit. So using Federal Reserve surplus. So before 2015, the Federal Reserve was allowed to keep a larger surplus of funds. Van Eck suggests bringing back this policy so the Fed can build up extra reserves, then use them to buy Bitcoin. I don't think this is going to happen at all. Jerome Powell has signaled that he has zero interest in holding Bitcoin as the Fed. So, 4, adding Bitcoin to the IMF's special drawing rights. So, SDRs are international reserve assets issued by International Monetary Fund, IMF. Van Eck proposes convincing the IMF to include Bitcoin in SDRs. Also, not going to happen. They've made it very clear with the loan they just provided El Salvador that they despise Bitcoin. They don't like it because it creates competition for them, and they don't control it. So, therefore, that has zero chance of happening. This one was pretty funny. 5, selling surplus cheese for Bitcoin. Sounds fair enough to me. The US government holds large stockpiles of many commodities, including an absolute metric shit ton of strategic cheese. God forbid we have a shortage in cheese. Van Eck suggests selling off these reserves and using the proceeds to buy Bitcoin. It's just funny to think of the US government holding giant warehouses of high value cheese by the ton. That's just funny to me. Uh, so anyway, whatever. It is what it is. But yeah, I think selling these existing assets rather than increasing spending, it wouldn't increase the federal budget deficit. We basically swap one commodity for another. Okay, utilizing the Treasury Exchange Stabilization Fund, the ESF controlled by the Treasury is used to manage foreign exchange reserves and stabilize the dollar. Van Eck's final proposal is for the Treasury to use this fund to buy and hold Bitcoin. Since the ESF operates outside the normal budget process, this method would offer a more flexible approach to Bitcoin accumulation. However, no one knows how we're going about doing it, but it sounds like they want to do it. I liked Bitwise's Hunter Horsley comment about Bohein's interview yesterday. Quote, when Bitcoin's at $200,000 per coin, we'll look back on March 2025 and say, how was everyone not buying? It was so obvious. I could not agree more. In the United States of America, the greatest economy ever constructed is openly telling you they want to acquire as much Bitcoin as possible. This continues to be a get long and chill environment. So specific on Bitcoin. Okay, so let's move back on to markets and how we've been doing this past week. So we can take a look at Bitcoin over the past week just for reference. Really, of course, since I went on vacation to Puerto Rico, we had this huge giant sell-off. Trump said we're doing a strategic reserve and it's going to include altcoins. We ramped back up, and then the very next day, sold right back off, ramped back up, sold back down. I think that might have been the bottom. That 77K is a pretty good level. Now, I want to see us start to move back above 85K and hold it, because so far we just keep putting in lower high, lower high, lower high, lower high. I want to see this moving up into the right direction. But let's talk about Arthur Hayes. He says that 77K was likely the Bitcoin bottom, as quantitative tightening, which we talked a little bit about earlier, is effectively dead. So the Fed's quantitative tightening is, quote, basically over, which has cryptocurrency analysts feeling slightly more bullish about its implications for the crypto market. Bitcoin's unlikely to revisit the 77K price level anytime soon after the Fed signaled a slowdown in quantitative tightening. Quote, was Bitcoin 77K the bottom? Probably. He said in a March 20th X post after declaring that QT is, quote, basically over. Following the Fed's March 19th announcement that starting in April, it will slow its securities sell-off by reducing the monthly Treasury cap from 25 billion to 5 billion. So basically, what that means. Let's peel that onion a bit. So quantitative easing was the Fed adding a tremendous amount of assets to its balance sheet. The Fed was going into the market and buying and boosting prices big time. That was to try to kind of shore up the COVID issue, right? And so they massively printed, massively added all those things onto its balance sheet. Well, in the end of 2022, and once they decided inflation was too crazy, not only did they crank rates at the fastest they've been since I've been alive in 42 years, they also started doing quantitative tightening. So now they started selling off assets from their balance sheet. So there's been a constant massive sell pressure in the US market by the Fed. So it slows its securities sell off by reducing the treasury cap from 25 to 5 billion. So this means there's going to be far more liquidity. This could ease liquidity pressures and support risk assets like Bitcoin, as quantitative tightening involves central banks selling assets to reduce the money supply and possibly raise rates, which is what they've done over the past 2 years. It's been a regime of quantitative tightening since the end of 2022. So, quote, the next thing we need to get bulled up for reals is either the SLR exemption or a restart of quantitative easing. Quantitative easing is what pumped us during 2021, big time. So if we look at this chart, and it takes a while for quantitative easing and quantitative tightening to really get going. but quantitative easing started right here, right after the COVID candle of doom. They started easing. And boy, oh boy, once people got the picture that we are printing like record number of dollars here, right about October, it became real. And then that money hit the economy and boom, you could just see what happened. So if we start quantitative easing again, albeit definitely not to this degree, but to some degree, that's what's going to provide us the fuel to really get going. This was the China bans Bitcoin sell off. We immediately recovered that. But right about here, the Fed started making noises. Hey, we're going to start raising rates. And this was quantitative tightening, this whole slope down quantitative tightening. And all the way across, ironically, we've still been in a quantitative tightening regime, even though we hit new highs. So that's actually pretty interesting to watch.
Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.